Marco Roque. I'm the president and CEO of Cassiar Gold. Cassiar Gold is focused on the Cassiar Gold project in northern British Columbia. It's a massive 59,000 hectare orogenic gold district. We have the Taurus deposit there with a mineral resource estimate of 1.4 million ounces, which we've been expanding, and we don't know how big it's going to get. And we also have multiple potential for satellite deposits that could be as big as Taurus, or that might even be connected. So a type of system that we believe that the big producers will be looking for in future.
Marco, good to see you here. David Creek, you're at the conference. You told me earlier, 15 meetings yesterday, and I guess the same again today and tomorrow. It's busy.
It's busy.
Good news. So what are people asking you about? What do they want to get from you?
Yeah, it's interesting. Like this year compared to last year, what I've seen, unsurprisingly, actually, it's an increase in the interest from the big producers. That's really kind of the big interest. I mean, everyone kind of on the more financial, institutional, or even retail side is kind of frustrated to see where the valuations of the juniors are, and everyone is saying that it makes no sense to see these valuations where they are, and especially when you look at the gold price and whatnot. So everyone is kind of thinks that the valuations are very low in the juniors. That everything points that they should really re-rate, but it's really been kind of a mixed style of meetings from the producers to the more kind of institutional type of investors.
Right. So let's start at the kind of bottom end of that, in the sense that retail are frustrated with the story. Kind of lots of commentary saying that this story hasn't really evolved or moved forward in the last 3, 4, 5, 6 years. It's orogenic, it's of a certain grade, and nothing really changes that much. What would you say to those people in terms of what you've done since you've arrived?
I mean, I came in 2020. At the time, we had a 1 million ounce resource with permits, with infrastructure. And between 2020 and 2021, we drilled 15,000 meters across the property. Roughly half of it towards the Taurus deposit. And on the back of that, we did a resource update in early 2022. We've expanded our mineral resource estimate at Taurus to 1.4 million ounces. And then since in 2022, and then since then, we've drilled 47,000 meters across the property with very consistent drilling. I mean, so the grades and the widths and the grades have been consistent. You might feel that's a bit repetitive, but that's what basically consistent growth means. So we drill, we expand mineralization, we open more areas for expansion, we drill more, we keep on expanding, and I think since the last resource update, not including this year, which we drilled 7,200 meters, but in the last 2 years since the last resource update, we drilled roughly 175 drill holes, and we only missed intercepting mineralization in significant widths above the cutoff grade in 2 out of those 175. So it's a very consistent hit ratio, and it's also important to point out that we've been always focused on drilling for expansion, not to conversion in mind. Some people might look this as like a 2 million ounce opportunity for development. We're looking for something much, much bigger.
Right. Okay. So it's a district. The companies of your size, the last few years have been cash strapped. It's been very expensive money out there. And also, as you refer to, not a lot of retail interest because they don't have the money to invest. They've got their own problems, right? Yes. You stuck with the same business plan, it seems. It's a small company with big ambition on a district-wide opportunity. Is that tenable in a market like this? What's got to change to make sure that you can keep raising money?
I mean, we've been able to raise money every single year with or without bank or brokerage support. So we do have the ability to raise capital. It is frustrating to see the company expanding consistent mineralization with so much significant drilling and not seeing that reflected on the share price. That's a function for the most part of the market. But it is a strategy that we firmly believe will deliver, the success and the return we expect. And we have a team of board members and management have done this before, and that basically discovered, built, operated, and sold mines all over the world. We have Steve Ledwin as our chairman. He's a former president and CEO of IM Gold. We have Steve Robertson as one of our board members, a geologist he was in charge of permitting and developing the Red Chris mine, which is majority owned by Newmont and just 200 kilometers south of us. We have James Maxwell on our board as well, another geologist. He was the exploration director for Sabina that got acquired by B2Gold for over $1 billion a couple of years ago. We have Chris Stewart on our board as a mining engineer. He's now running the Yamlo mine in Nevada for Barrick. We have David Rees, one of the most respected and sought after structural geologists in orogenic gold systems, as our chief technical advisor. And, these are not just names. There are people who are involved on a week by week basis with the company. They understand what success looks like. And, we're all, pretty much aligned on making sure that we grow this asset. We grow our resource inventory to, really set ourselves for when the market comes, and it seems like it's coming right now. You're starting to see the M&A trickle down to eventually command the valuation we believe it is possible for an asset like this with this potential.
Right, but I make my money, the share price goes up, right? So I need you to be really clear what type of investment I'm getting into here, because what I've heard from you is expect more drilling. We're trying to expand this resource. We're going to be doing infill anytime soon. We think that it's big and we've got to keep drilling. So that sounds like more money needs to be raised. It's the name of the game. But you guys have raised way more money than the market cap today. So people will be looking to that and going, well, that doesn't make sense. Again, is that sustainable?
Well, I mean, it is. I think this market will eventually have to turn around. If everyone stopped drilling to because the market is hard, or we run out of deposits for the big majors to replace their ounces with. So, and they need their ounces, and I can tell by the meetings I'm having, they need their ounces, it's something quite interesting as well, is that actually I think there's a big move towards safe jurisdictions, and that also means that we're competing with, I think, a much smaller universe of companies. Before, the whole globe was fine for most producers. Now I think Western producers we're seeing a trend of moving towards safer jurisdictions like Australia, US, and Canada. If we believe in what we have, we've been delivering and demonstrating those, by the drill bits, the potential, the widths and the grades, and the potential to increase the resource. So we believe there will be a time for us to shine. It is frustrating to see where we are, but we will keep moving this forwards, because we know the ultimate potential of what we have here. And there's always different ways to access capital. It might not be the capital markets. It might not be the retail investors or the institutional investors who have been struggling for the last couple of years, despite the increase in the gold price. So we will keep moving this forward. And we've seen a lot of these cycles in the past as well. I remember seeing companies like Great Bear in a 30 or 40 million market cap, and they had some really good results at the time. A few years later, they got acquired by 1.8 billion. Or companies like Skeena, similar valuations many years ago, and now it's a 1 billion market cap. So success is not a straight line, and the cycles in mining are long, and they can be very tough. But when you have a really good asset, and which is very prospective, I think eventually people will see the forest from the trees.
Okay, I hear what you're saying in terms of the way you're approaching this expansion. It will appeal to the majors for sure, but there's a lot more drilling before they're going to step in and maybe get interested in this thing. I suspect, unless something changes with this high-priced gold environment, maybe they're willing to kind of go upstream a little bit. Who knows? So with this kind of constant raising of capital that you're going to have to do, I need to, again, come back to that thing. I need to know that that's what you're going to do. The cost of that capital is what it's going to be, and that's your plan is what, another year of drilling, another 2 years of drilling, another 3. I mean, where does it stop, and when does the good times come? Where's this appreciation that I need to make my money happen?
Yeah, I mean, if you're just focusing on the share price, I really don't know. I really don't know, because I don't control the market. I don't control the sentiment in the markets, because it's a very different thing, price and value. I would argue that, you know, a lot of the juniors are undervalued right now and not getting enough appreciation. Now, you know, of course, you know, dilution is painful and hurtful for shareholders, but we also need to move the projects along and make sure that we keep advancing the geological knowledge, we keep the geological know-how within the company, and we progress and we stay relevant by demonstrating every year progress. Now, when times are good, we can have much bigger programs and accelerate that progress. When times are tough, we need to really balance the dilution versus, you know, advancing the project in a meaningful way. And I think, you know, we've not only been able to, I think, strike a good balance between the two. And this year it's been a lot heavier on, for example, geophysics and mapping, which is kind of cheaper, and it also helps us advance, you know, a lot of, you know, some of the targets that kind of been ignored. But it's in addition to that, what we also have is insiders that are actually putting their money where their mouth is. You know, we're not just asking people for money.
Right. Well, this maybe, let me ask it a different way, because this is where I'm getting to. Is the insiders feel confident because they understand why you're doing what you're doing in terms of the drill bits, in terms of the geophysics, in terms of all the processes on the ground, right? I'm going to park up any value that may or may not be attributed to mines and tailings and, I'm sorry, mills and tailings, etc. Because I think that's practically zero at the moment. Is if these insiders know why you're doing what you're doing, surely, and the industry guys will too, surely it's your job to explain to retail and say, look, this is the process we're going to follow. And let me tell you why that's important. Let me tell you why that's valuable to potential acquisitors or strategic partners or JVs or whatever happens in the future. I think maybe the audience is struggling, retail audience is struggling to understand why you're doing what you're doing, and more importantly, how do they value that, if not today, in the future? So can you explain how those dots join up?
Yeah, I mean, we have maybe a set of big producers. So our ultimate goal, it's an exit strategy by M&A, right? Like what Great Bear did.
For sure.
And it's been the model for juniors for a long time. We do have the ability to bootstrap this, leveraging on the infrastructure and the permits and the skill set we have within the company. But obviously, we would prefer, you know, like a clean M&A strategy, because that's where we believe the biggest return for our shareholders would be. Now, you have a set of producers that at this point in time, in 2024, you have maybe 3, 4, 5 producers that are looking for 5 million ounce plus deposits in world-class jurisdictions, or world-class deposits in safe jurisdictions, which, you know, are shrinking by the day in the kind of the geopolitical context we're living today. And then you have another set of 15 to 20 companies that are that will be happy with a 2 million ounce plus. So, waiting for the markets to come around, it really wouldn't, do much for us, right? Park a deposit and, wait for the markets to come to us. So what we're doing really is drilling to demonstrate, what we see as all the indications from the drilling, from the structural controls, from the geophysics, from the mapping and the sampling that give us so much confidence about the potential of resource inventory that we see. And we need to advance that. Then it goes back to like, how fast can we do that? And that's always going to be a function of the market cap and dilution, and that the key is really striking that right balance. So we're every drill program, every geophysical survey, every mapping exercise, and I can talk about all of these that we've done in the last few years. Really, every piece of work we do get us more confident about the systems that we have identified, and even more confident of potential systems that are yet to be defined within our property.
Right. So I do want to understand that, and I don't mind if you give me some more detail, because it feels like there's a stack of data that's sitting there that you gathered over the last 2 years, but people don't know how to interpret it and put that together. You're talking about a resource update at some point, what, next year?
Yeah.
Right.
Next year.
Early next year.
Yeah.
Okay. So that's a kind of flag in the sand which says, look, we've kind of grown the size of this front, and it'll be going from 1.4 through to a number to be defined, right? But it's going to be more of the same in terms of grade. So managing expectations, surely. I know you kind of got these high grade veining through it, but usually organics fairly standard, within a range, right? On average. So how do we get to that point? Are you financed? Because you talk about a fully financed drill program for 2024, and then you go and raise another $1 million, and people are like going, what's that for? Is this G&A? Is this keep the lights on?
Oh, no. The $1 million we're raising, it's flow-through. So it has to be 100% to the ground. And the reason we've launched a small financing is because in August we expanded our drill as well as our geophysical and mapping programs. And in order not to spend hard dollars to benefit from the tax incentives from the flow-through, we're taking the very small $1 million, go straight into the ground for the program we're executing. We have over $7 million in the bank, and we just want to use our dollars the most efficient way possible.
Okay. Do you like flow-through?
Yeah, I think it's a beautiful mechanism. I mean, it really reduces the dilution because, right now, and on average for the last few years, you could issue at a 50% premium versus, hard dollars, which, by...
Right. Are there any warrants attached to that?
Yeah, there's a full warrant at 50 cents.
Right. Okay. Some people come through the doors and say, sometimes flow-through is good when you need the capital, but you've got to go and do something good with it because of the type of investor it approaches, and they're playing the warrant game, etc. Is problematic down the line.
Yeah, that's the case for the traditional flow-through. So there's a difference. So you have the traditional flow-through funds that typically have a hold period. The majority, not all of them, but the majority of them have typically a hold period from 4 months to a year. And that would be kind of short-term capital, although, in these days, I think, long-term for some investors is a long weekend. But so you have those traditional flow-through funds that are more short-term. But what we're doing actually right now is a charitable flow-through structure where the back-end investors are found by us, they're not traditional flow-through. So ideally, it's a public company, like you can force people to hold for the long term. But that's really what you're looking for, people that understand what you're building and are looking to hold for the long term for the ultimate price, which is what insiders are doing. Insiders buy and hold. So, there's a different type of, this is a different type of structure who has a potential, hopefully it's a much better longer term type of investors as well.
Right. Okay. So I just want to be really kind of clear your position. You talk about $7 million cash in the bank as of last quarter.
No, as of yesterday.
As of today. Okay, great. Most people don't like to say that. Okay, $7 million there. Okay. So resource coming out early next year. You won't be rushing to do any kind of economic study?
No, I think it's too early. Too early. We're actually looking into some activities on that front, but we're
given the plan.
Yeah, we're just looking to see what would be the things that would be needed. But again, if in the future we would go ahead with some sort of PEA, it would be just to use as a platform to just open the potential range of investors to a wider range, because people in system economics, they have a better sense instead of trying to figure out
it would seem incongruous to your business plan, which is make yourself appealing to majors to do an economic study.
Yeah.
And your conversation so far has been, let's get some data into the market so the majors get a sense of what we're trying to, or could be, right? However, as a small company, sub 30 million sort of company, you've got to talk to that retail who can really kind of move the dial as well. So that's what you're saying. If there's an economic study, it's really to kind of give them a sense of size, opportunity, and what the future could hold for you. That'd be the only reason. It wouldn't be a business reason.
No, because, like, we're not trying to define a 2 or 3 million ounce development opportunity.
Yeah.
We're trying to define a 5 million ounce plus district, and that's not going to be done overnight. That's not going to take 6 months or a year. It's going to take, it really depends on how much drilling can you do next year. It's more a function of how fast can you drill and expand mineralization. But because then it will, again, if we do an economic study, then we go ahead and keep on expanding. That will become stale very quickly as well.
Okay.
But it could be valuable just to give people a sense of
But
economics.
people, you mean retail, right?
Yes,
purely
yes,
retail.
yes.
Because
the big producers, they have a sense of what things cost.
they can take your data and put it in their model, and it's fine. Talking of great clear. Okay, so I think kind of the path forward for the next 12 months is kind of clear what we should expect from you. The question is, does the market work for junior explorers currently? I'm getting the answer is no. I know the answer to that one. What do you think it's going to take in terms of this kind of change in market sentiment for because you said it yourself, you said it a couple of times, okay, gold price is 2,500 plus, right? It's insane. Fantastic, I mean. But no reflection on equities, certainly not exploration. I don't know if I agree that there's a kind of trickle down from the M&A yet. I think mergers of equals, we're seeing M&A producers buying producers, and that trickle down through to developers is not, on the whole, it's not there yet. And then certainly that money's not coming back down into the explorers anytime soon, I don't think. But you can tell me different. How does this play out for explorers over the next 12 months?
Well, I really don't know. That's the short answer. I mean, I
did say that you should bring a crystal ball. I did say that.
Yeah. No, yeah. I mean, like the historical cycles in the junior mining space give you some metrics. Like just yesterday, I was talking with some bankers. The valuations, the historical PNAVs on some of these companies have been on average. 0.25, 0.3. Now, these companies are trading at 0.1. So it is quite undervalued. So, I mean, I believe, markets can be, stir away from fundamentals for only for so long before they can, go back to, revert back to a mean. That's my view. I think, like a year ago, gold was trading at 1,800s, and people were saying, as soon as gold crosses 2,000, the floodgate is going to open, everyone's going to rush into the sector. We're at 2,500, that hasn't happened yet. I'm bullish on gold, but I'm a consummate gold bug. And I think if the Democrats win, I think that's going to be very bullish for gold in the U.S. We're just about to see, I think, a rate cut cycle from the Fed. That might help, and historically that does help. I think you're saying about the M&A, in real soccer, you're starting to see some transactions. I mean, you saw the Caliber acquisition by Marathon, Goldfields. Just yesterday, we saw Anglo Gold putting out a $2.5 billion bid for Sukari, Centamin. So yeah, it is.
That's all at the top end, right?
Yeah.
That's all
producers.
at the top end. And and when shareholders make money off the back of those transactions, they've got to reallocate. Okay, but they're probably going to reallocate on a similar sort of profile, right? Yeah. And that's not necessarily going to be for that audience exploration. And that's my point. Is the money needs to come from somewhere. Alternative financing is just a phrase that I think people use at the moment. And there's lots of options on the table. I'm interested in. I think I've had a good conversation. I feel I've got a lot out of this, understanding what's going on in your head about what you're building, and how you're going to get there, and how to manage my expectations. I'm not going to get it runaway excited, but it might be we're setting a position for the future. That's what it feels like. Sensible.
Yeah, and that's what I feel like, and that's the reason why in the 2 last private placements I put in, just under $500,000 of my own, fresh money into the company. So did our chairman Steve Lewin, and 2 kind of other key components of what I believe is going to continue or is going to be very supportive and constructive for the junior mining space is you have, with a higher gold price, these producers have this, the balance sheets are getting cleaner and cleaner. You have cash coming in. It's going to be, it's a long cycle for, now they say it's on average 18 years from discovery to production.
Yeah.
They're going to have to acquire to replace those ounces. So that's helpful. And I think another kind of topic that I think is going to be very constructive for the space is, I think generalist investors have kind of shunned away, or kind of don't really appreciate kind of the gold sector, but the cash flow and the cash flow metrics for the big producers is amazing. And the producers are starting to move. I think year to date they're 25%.
What are your discovery costs?
Well, we're drilling at $211 Canadian a meter direct. The calculation we done on the first couple of years, we're looking at around $20 an ounce.
Okay.
Yeah. But
see what that looks like when the resource comes out.
Yeah, and that's the other thing. The metrics for acquisitions, you look historically in periods where the gold price has been, ranging between $1,000 and $1,500 would be, $200 per ounce on the ground, or $250. So if gold price is twice as high, you could maybe expect that in this kind of new price environment, that like potentially double as well. I certainly wish so, but let's see. I don't have the crystal ball. We know we have something quite undervalued with a lot of potential, and we're keeping our head down to build it, to make it bigger, because we believe they will come. So that's what we're doing.
Okay. Appreciate the update. Like I said, it was worth my time. Thank you very much.
Thank you.
We'll see you soon.
See you soon.